A profit warning and a massive layoff coming from Airbnb. That just tells you that how precarious and how fragile the tourism and travel industry is in. Airbnb, in a sense, was the most cherished business which got created in last 10 years, which completely disturbed and changed the way how traditional hospitality or hotel industries were moving. So one way of looking at it is Airbnb is in trouble. Another way of looking at it is that Airbnb and Oyo, if they are in trouble, it could lead to massive consolidation in the hotel industry. This could be a gap year for travel and tourism. But next year, when demand comes back, will the Indian hotels and the AIH really gain grand market share because the smaller players, in a sense, are going to be in a fix? I think it's too early to say that, because whenever demand will come back, I think pricing power may not really come back for this industry. I mean, airlines are saying that, look, we will have a differentiated approach in flying, but in that differentiated approach of flying, the cost of running the airline is going to be so high that while we've we we may think twice before really buying an airline ticket, because mechanics of economics of cost is something which you need to be careful of whenever world will normalize. Sameer, what is there on your radar today? FI selling, market reversal, or that sudden selling which has now come back in NBFCs?
Morning, Nikunj. I think the first thing that we need to look at is that the trend that started in March of aggressive FI sales, which was pretty much not an India phenomenon, but across the region, that at least has ebbed in April. So hence, we've seen that nice 30% kind of a pullback rally. But I think the other factor that perhaps has not been discussed much about in the month of April was that domestic institutions have actually seen a net outflow of roughly about $200 million. Now, this in the last 3.5 years, I think it's been only about 4 or 5 months when DIIs have been actually net sellers in a month. So I think there it could be partly explained by the fact that you had the Franklin episode, and there was some amount of liquidity crunch as well, because people thought that let us try and get some powder dry in terms of how to build a nest, given the fact that conditions will be a bit strong and difficult going forward. But I think that factor we need to keep watch as to how things play out in the immediate future, say the month of May, June, etc. And I don't know whether we've got the data for the April month in terms of local flows. So I think the SIP number also is important. Now, I think that is what is happening on the flow side, which is also a reflection of what the investor psyche is all about. We've also seen a lot of new accounts opening in terms of DMAT. So that's a positive sign. I think on the corporate side, all the headlines are clearly telling you that, belt tightening is going to be the norm for us, definitely at least 2 quarters in times to come. So cost is going to be the key factor. And I think, revenues, the April, May, June quarter will probably, going by the auto numbers for the month of April, you can clearly see that I think April, May, June on the revenue line is going to be where the brunt of the impact. And I think that's the reason why the FY21 EPS earnings on the Nifty we'll have done a good deal in case we go and get a flat earnings for the year FY21. So market is pretty much now wanting to discount FY22, and I think that's really quite an opaque glass at this point in time, because you've got the vaccine news flow, so that could mean that the revival will be sooner than expected. But I think things are probably get worse before they get better.
CK, for someone who's perhaps convinced that the economy is not going to recover and markets are headed lower, the first port of call is go to sell banks. But CK, some would also argue that after a 50% drop in Bajaj Finance, after a 30-40% drop in, let's say, HDFC Bank, and almost a 50% drop in ICICI Bank, is it too late to sell now or short sell now?
Good morning, Nikunj. Well, if you're looking at it from a pure price perspective, you would definitely get slightly better prices to sell. So, but then the main point here is that since the markets have taken a turn and the outlook ahead is not pretty at all, the preferred action should be to sell the stocks. Now, whether that is stocks from the financial space or that is stocks from automobile or metals or whatever, that really is a matter of choice depending upon a specific sector or stock-based news flow. But then the overall approach towards the market, given that we have turned decisively from the top of the rally, which also gave us quite sufficient amount of signals that it is kind of topped out here. That would mean that the default approach has to be too short. Now, it's a individual thing as to what is too low. Now, 50% erosion from the top can definitely be taken to be a yardstick of something which is being low. But the market will give you some rallies, and wherever you get the rallies in whichever stock, I think those stocks will probably get set up for a good shot at higher levels, provided that there is no individual stock news which is driving them upward.
Main focus, and that's ITC as well as Axis Bank. Here's what we are picking up from the Economic Times. It seems that the government is aiming to raise about 22,000 crore rupees from its Suti stake in ITC as well as Axis Bank, and they're hoping to complete the stake sale by as early as this week itself or early next week. Now remember, the government owns about 4.69% stake in Axis Bank and about 7.94% stake in ITC. Having said that, the 3-month performance of both these stocks, that's questionable. You've got Axis Bank, which has fallen about 46%, and ITC as well has slipped about 20%. Even if I look at the 1-year performance, if you assume that this is not a COVID-related fall, even the 1-year performance for Axis Bank, it's fallen about 48%, and ITC has fallen about 43%. Sameer, I know desperate times call for desperate measures, but this is almost like a distress sale wherein you're not going to easily find takers, and the price as well is screaming of a distress.
Morning, Aisha. I think what we need to read here is that government's resolve to shore up revenue is very clearly extremely strong, and they are sensitive to the fact that revenues will be hit, and hence we need to look at anything that can earn some receipts. But having said that, I think the investor preference or disposition towards looking at buying equity, even in a good brands like Axis and ITC, I think at this point in time, it would be slightly marred by the more recent or the short-term immediate expectation. Because if you look at, I think Axis declared numbers about a week, 10 days back. The numbers operationally were pretty decent, but despite that, I don't think the stock has performed. And that is also a matter of the fact that you will also be looking at what is likely to happen in terms of if this revenue pressure across the economy continues with the lockdown continuing for some more time, then you will probably see a next round of NPAs hitting the banks. I think that is the basic fear here. And on the ITC side, the very clear discretionary spend coming under crunch, because right now incomes will be hit, you'll be having job losses. So one really doesn't know, because although what the last 2 days we've seen that the moment you opened up the liquor shop, people had a massive queue. So I think the government on its side is trying to make the balance in terms of getting the revenues in, because liquor is a very, very large revenue stream, especially for the states. So maybe that was very clearly the rationale. But look at how it has manifested. I think the amount of the cases that have gone up post this, and what is likely to usher in terms of the wave of the second case, because I think people have not been able to resort to the right kind of social distancing norms. And I think that's a big risk. So today, if you ask me, will there be interest? Yes, long-term investors, these are great franchises, and today you're getting them at such great prices. So if you're willing to live with the next 2-3 quarter kind of a short-term pain, these are great prices and a very good entry price. And you're getting size at a good price. But the question is that if I buy today, am I likely to see a 15-20% haircut in the immediate short term from my current investment? Yes, that is also very much a probability. So I think that is clearly the conundrum that investors are facing right now. That these are great businesses, but unfortunately today, the short-term scenario is so murky that one doesn't know that if I buy today, then will I be able to buy more at 20% cheaper? Definitely yes. So I think that's clearly the challenge.
Sure it is. In fact, Vivek from